Hey team. Well, we're going to give a thumbs up to say we're here. Maybe some of you, if you can hear us, could chuck a bit of a thumbs up in there as well. Got one, Robert. Phil. All right, great. We've got a few people here. Thank you so much. And sorry we're starting a little bit late. Despite all the practice that we've had over the last year or so with videos, we still run into issues every now and again. But we're chuffed to be here. Welcome to another week of Lunch Money. Kia ora, everyone. We're doing these every Thursday at lunchtime, and they're now available as a podcast on Spotify, Apple Podcasts, and Google Podcasts. My name's Leighton. I'm one of the co-founders of Sharesies, and this is Sonya, also one of the co-founders of Sharesies. And we're super stoked to be joined today by Todd Hunter, who is the CEO at Turners Automotive Group, which is a listed company on the NZX and on the ASX as well, which we'll talk about a bit later. Just a reminder that if you have any questions for us, you can submit them through the Ask a Question button down below. Don't leave any questions in the discussion, as we're unlikely to pick them up there. Quick legal disclaimer, no personalized advice. So anything that the three of us talk about is our own opinion and not based on any information that you give us there. Investing involves risk. You aren't guaranteed to make money, and you might lose the money you start with. We don't provide personalized advice or recommendations, and any information we provide is general only and current at the time. Finally, please be kind and respectful towards our speakers and your fellow viewers. Otherwise, we have to take steps to remove you from the webinar, and that's something we definitely don't want to do. Sonya, maybe you could introduce today's guest, Todd.
Fantastic. So just while Todd's joining us, give a bit of background to his career. He's got a background in marketing and sales and accounting, joined Turners Auctions in 2006. He was then appointed CEO of Turners Auctions in 2013 and is now the CEO of the wider Turners Automotive Group. So kia ora, welcome, Todd.
Kia ora.
Hi, Sonya. Hi, Leighton. Kia ora, everyone. Great to be here finally.
Thanks for joining us, and we'll just ignore the technical hitches now that we're here and hope that that's the last of that for the rest of the session. So I've given a bit of a background just while you were joining around the highlights of career, but can you tell us a bit about you? What's your story?
Yeah, I come from Kerikeri in the north. Grew up on a kiwi fruit and orange orchard. Fair to say that kiwi fruit and I have had a separation for a number of years. Finally, we've reconnected. Love the gold.
They're going pretty good guns at the moment, aren't they? The kiwi fruit.
They are. I'm the father of three girls, and Liz, my wife, here in Auckland. Got a great job. I've been at Turners for almost 15 years now, and I've had a very interesting career in terms of kind of got out of university, worked for Ernst & Young, and reasonably quickly decided that the CA kind of environment wasn't for me, and then had a fantastic ride with Microsoft kind of through the mid-90s and in the early 2000s, which was a pretty kind of sort of awesome experience from just being involved in a tech company at a time where it was just going off, and being involved in kind of getting opportunities just to do different things, which really kind of helped form my sales and kind of marketing career, and then kind of led into sort of the opportunity to do more kind of generalized, operational type roles, and eventually kind of become the CEO.
And so, CEO, it's a big title. Can you tell us a bit about what your day-to-day looks like?
Yeah, I have I have a busy day, like a lot of people do, largely I guess it's kind of setting the direction for the business, being the kind of guardian of the values that we have in the business and the culture, particularly. Put a lot of effort into communicating with people, and making sure that they understand kind of where we're going and what our priorities are, but also understanding from them kind of what issues and challenges they have and what are the opportunities that they see. And I very much see that as a kind of two-way engagement. I have actually been running our finance business for the last 2 years as well, so I've been pretty deeply involved in in the finance operation over the last couple of years, as well as being the CEO for the group. So yeah, there's a reasonable amount on the plate, but I love it and love the organisation very much.
Yeah, fantastic. So, can you tell us a bit about Turners? What's the business? There's lots of subsidiaries in there, and can you just tell us about how that fits in?
Yeah, sure. I mean, quick, a little bit of history quickly. I mean, Turners Automotive Group is really the merging of the old Turners Auctions business, which used to be a division of Turners and Growers, a wholesale auction business selling cars to dealers, and then it merged with Dorchester Finance. And that was almost like a reverse takeover, in the sense that the Turners Auctions business was a much bigger business than the Dorchester business. And so we've been quite an acquisitive business. I think we've been through quite a period of sort of consolidation and simplification, as you always sort of end up with out of the back of a large number of acquisitions. And so what we're left with now is really an auto retail division, which is the buying and selling of cars, trucks and machinery, and damaged vehicles. So we make money out of buying and selling those things. We make money out of selling on behalf of vehicle owners as well. We've got a finance business, which largely we're just lending money to people to buy cars, not just through the Turners Auto Retail network, but through third-party dealers and brokers as well. We have an insurance business which underwrites mechanical breakdown insurance, so a product that typically people might buy when they're going through the process of buying a car, particularly from a dealer. So that business, obviously makes money from selling the policies and making money off the premium. And then the last business we own is a business called EC Credit Control, which is in the credit management, debt collection space. So we help companies with hard to collect debt, and we make a commission off collecting that debt on their behalf.
Yeah, fantastic. So lots of strings to the bow there.
Lots of strings to the bow. But three of those businesses are quite focused around particularly the used kind of automotive market.
Fun fact: my first job was at Oxford Finance, which is the finance.
I hear you've got deep connections.
Lots of my whānau still work there, and I was a filing clerk there when I was at high school. So
I did hear that.
So across all of those, in a simplified way, how do you make money?
Yeah, and I mean, in a simplified way, we make money out of buying and selling cars, lending money to people, and selling them insurance products. I mean, that's essentially it. It's not a complex story. It's very much around kind of an auto ecosystem, if you like. And we kind of cover most parts of that. Probably the only bit that we don't cover is the service and maintenance aspect of the life cycle of a vehicle. And that's something that we're starting to put our minds to.
Yeah, cool. And I mean, maybe this segues into that statement, but what is your vision as a group, and how are you going about achieving that?
Yeah, I think our vision is to create New Zealand's sort of biggest sort of vehicle user ecosystem. And I guess the way we're going about that is really kind of putting the building blocks in place. And then it's really just sort of cranking up our market share in each of those different businesses. I mean, the great thing about this business, and it's really been kind of highlighted over the last 12 months, is that it does have some quite diversified revenue streams. We've got a couple of annuity businesses, so the finance business and the insurance business. They're the sort of businesses that you earn money when you're lying in bed asleep. The auto retail business and the credit management businesses are both what we would call activity businesses. I mean, you kind of live and die by what you sell or what you do in any given month. And the combination of those two, I think have worked very, very well in a kind of volatile, uncertain sort of environment. And you kind of combine those two things with a bit of geographic diversification, and particularly the used car market, which we've always kind of seen as a very resilient market. There is just a large number of transactions. They are certainly less susceptible to fashion and kind of just deep cyclical changes. When people typically change their used car, they're doing it for quite a good reason. Circumstances have changed. One that we had before has broken down, or something's wrong with it. So there is just this level of transaction that goes on really kind of no matter what the economic environment is. So yeah, sort of going back to your original question, we are looking at building out this sort of vehicle user ecosystem, and whether people owning a car outright in the future or subscribing to a car, we're kind of putting the building blocks in place to make sure that we can provide the access or the way they want to consume that service in the way that suits them, and kind of providing optionality around that.
So you just spoke a little bit about the variability of market, or actually the consistency, I suppose, in the used car market anyway. But maybe you could talk us through a little bit COVID-19, both from the CE hat and managing people, but also the business and how that's performed over the last year or so.
Yeah, I mean, it was. Yeah, I mean, April last year was clearly was an interesting time for everyone. I mean, sort of look back on that time, and we were, like everyone, very much in a react kind of mode. We were planning for an extended lockdown period. I mean, we actually, no one knew how long we were going to be in lockdown for. I mean, we were certainly preparing ourselves for kind of 6 months. And yes, I mean, in April, all of our auto retail branches got shut down. I mean, they stopped operating. So we had to think quickly on our feet. I mean, we'd made some quite good decisions, I think, over the last few years around our digital platform in particular. So we were able to sort of launch very quickly a kind of online buying program for auto. We sold nearly 700 cars in April last year. We sort of geared up around remote working. So there were a lot of things that we had to sort of spin up very quickly. What's probably surprised us, Leighton, is just the level of demand that was there, kind of coming out of particularly that sort of April, early May period, and we had the kind of sugar rush of demand in June and July. But I think what everyone kind of underestimated was, well, A, the amount of money that people were spending on travel, and B, probably the effect, or the effect for people on their kind of disposable income with the interest rate kind of environment that we were heading into. So if you were on a fixed mortgage, and you'd come off last year, I mean, you were getting a pay rise, effectively. And I think the other thing we saw, particularly in the finance business, was just the level of disposable income that people kind of had out of the back of lockdown. So when you can't spend money on takeaways and at the pub and all those kind of things, actually you got to the end of the week and people just had a lot more money in their pocket to meet their commitments. So certainly for us, the arrears position in the finance book improved significantly when we were probably expecting the opposite of that. So there were a few things that were, you sort of look back in April last year and go, we thought, there would have been more cars than we knew what to do with. Well, in fact, there's been a shortage of cars. So massive kind of impact on the global supply chain for new car manufacturing, which is all, kind of worked its way through into the used car kind of market. So a lot of things that we thought would happen, kind of almost the opposite did.
Yeah, it didn't really follow too many normal rules, did it? You normally think credit businesses are going to be the ones really thinking, oh, where are we going here? But that's super interesting to hear that. I hadn't thought about an actual reduction in arrears in the worst markets, or most turbulent markets we've seen. I mean, we sat in April and thought, well, the one business that's going to go really well is the credit management business. So we do a lot of collection work on behalf of the big banks. And our expectation was that business would have been heading, to kind of, lots of debt load. And in fact, it was almost the opposite of that. I mean, all of those banks were being very careful around their reputational management and working with their customers. So we had three businesses that we thought were going to, have some reasonably tough times. In fact, they've gone extremely well. And the one business that we thought was going to go really well
has not.
Right.
Has found it a bit harder.
It's quite pleasing story-wise.
Yeah,
Hear that,
no,
you know?
no,
Yeah.
I'd much rather be in this position than the opposite, put it that way.
Yeah, absolutely. So just reflecting on the last 12 months, if you were to say a learning for people aspiring to be business leaders and stuff, what would be something that you think you've taken from the last 12 months?
Look, I always think you can't communicate enough. Just being as open and transparent as you can with people, certainly for us, giving people certainty around what they were going to get paid was their absolute number one kind of priority, and that was an easy thing for us to solve. Just kind of keeping in check with people, probably, particularly around the work from home thing. Just the regular contact is something that we've kind of looked back on now as a learning and said, well, okay, we probably could have done a bit more of that. And then probably more from a business perspective, I would say just the investments that we have made in digital and technology just certainly kind of put us in a good place to react, think forward and kind of keep our eyes on the prize in terms of what are the opportunities kind of coming at us, because there are always opportunities out of situations like this, and I think we've been in a good position to kind of react to that.
So looking forward, what do you think for the next 12 months? Where's the opportunity, and where are you sort of looking to narrow in on?
Yeah, I mean, for us, it's kind of, largely it's kind of more of the same. I think our two sort of big growth opportunities are in auto and in finance. And in auto, I would kind of call it, retail optimization is, the best kind of way I would describe that. And that's kind of as much as anything, it's very much around the digital kind of online platforms, as well as a kind of physical footprint kind of solution to that. So we are looking at expanding our footprint, particularly regionally. We've got some really good traction in kind of new parts of New Zealand that we haven't been before. So auto is a big opportunity for us. We've been kind of transitioning that auto business out of a wholesale focused business into a retail consumer focused business over the last sort of 5 or 6 years. And there's still kind of plenty of runway and opportunity for us left in that space. Sourcing is a big opportunity in that auto business as well. I mean, we source probably sort of 90% of our cars locally here in New Zealand. So we actually import relatively few cars compared to the total number of cars that we sell. And we typically lose money on about 1 in 4 cars that we purchase. We just get it wrong for some reason. So that's a big area of focus for us. How do we use data? How do we provide tools to the people who are making those pricing decisions and just get them better information? So we reduce that number from 1 in 4 to kind of 1 in 6. I mean, that has a big payback for us. And then in the finance business, we've done some quite clever things around the way we risk price loans. We've been a very early adopter of comprehensive credit reporting, and I think we're probably a market leader in terms of our understanding of that and how we put it to work. So we're pretty confident that we can keep reshaping the quality of our book. So we put a lot of attention into a better quality borrower and making sure that we're pricing the risk appropriately, which has been a very good strategy for us over the last 12 months.
So looking at, I guess, the auto landscape in New Zealand, you talked about, was it 90% of your cars coming actually from within New Zealand? Is that?
Yes, that's right, Sonya, yeah.
Yep. And so we've got some information around like having an aging fleet, vehicle fleet here. And I think there was something around just shy of 1 million vehicles almost being near scrapping age over the next year or so. How does that impact you, and why does that happen?
Yeah, well, I mean, the impact for us is there is immense opportunity. I mean, you think about sort of almost a quarter of our vehicle fleet kind of at or very close to the end of their useful life. That means a lot of people need to buy new cars at some point, so it's a good thing for our business. The reason it's happened I mean, largely, I think it's due to the fact that cars have got kind of better and better over the years, so they last a lot longer. And from the research that we've done, Kiwis, typically don't spend massive amounts of money on their vehicles. They would, 60% of people would spend less than $10,000. Kind of 80% are spending less than $20,000. So that's why you kind of end up with this aging kind of vehicle fleet issue. Well, yeah, that's essentially what's created it. Yep.
And then let's talk about e-vehicles and the rise of e-vehicle sales. How are you seeing that playing out at Turners?
Yeah, it's something that we are excited about. I mean, I think we've got a really key role to play in helping transition the fleet in New Zealand. There's sort of 26,000 EVs in the country on the roads at the moment, out of a installed base or vehicle population of nearly 4 million cars. So it's fair to say there's still quite a lot of work to do. I think the way we're sort of thinking about it, particularly vehicle subscription, we think is a really sort of core part of the solution set that we think can solve problems for people. And I guess often people will be thinking about EVs, but they have concerns about the battery degradation and the range and where am I going to charge it. So there's and the speed that the technology is changing and things. So putting down somewhere between 15,000 and some other much larger number is a big decision for people to make. So the way we're thinking about that is subscription might be the answer. So a much more flexible type of arrangement where people kind of pay on a rolling month basis, have much more flexibility. So it's almost a try before you buy type situation. But also, if your needs change, you can just swap out of the car that you are using now and use another car. So if you are going on a road trip or you need a bigger car for some reason, you can just simply change out during the month and then revert back when it suits you. So that type of model we see as being kind of a key part of this, particularly this kind of EV transition that we're going through.
I'm just going to jump forward a few questions here. We've got, because of time, we've got a bunch from people who are listening as well. But there's one that's topical for us at the moment, which is you can already buy Turners Automotive shares on Sharesies through the NZX. We're currently rolling out to ASX. So there's people who can now invest in it through the ASX as well, and everyone will be able to pretty shortly. So why list on both exchange? What was behind that decision?
Yeah, the simple reason, Leighton, was just to access a wider pool of capital.
Right.
So if you think about the kind of number of funds and particularly institutional type investors here in New Zealand compared to Australia, I mean, obviously there's a much larger number of them in Australia. About 2/3 of them would have 2/3 of them would have a mandate for the ASX, 1/3 NZX ASX. So it just kind of opens up a bigger pool of investors. It's a very simple explanation for it.
Yeah, great, and a good jargon buster opportunity here as well. So bigger pool of capital, maybe capital. Could you just describe what that means to your business, or what that means? Break that jargon down.
So when we need money to, or additional kind of money to take advantage of opportunities, there's kind of more places to go to access that money, basically.
Yeah. Great, thank you. We'll jump into some questions. So we normally do this, try this quick fire to get through as many as possible. So first, wondering if any, and whether companies like Tesla selling cars and insurance direct to consumers online without dealerships is a threat or opportunity for TRA.
I think it's an opportunity. If you compare the number of used cars sold in this country to the number of new cars, you're talking sort of 150,000 new cars, and there's over 1 million used car transactions. We see that as particularly selling cars online in a traditional e-commerce way is a big opportunity for us. So essentially, that's what we were doing in April last year. We also we launched a click and collect type model. There's a number of businesses offshore. If you look in the US, there's a big business called Carvana, Cazoo in the UK and Europe, who are essentially taking a traditional kind of dealership business and turning it into an e-commerce business. So used cars can be sold just the same way as you buy a shoe or a t-shirt online.
I mean, the next question is, have you guys looked into the model Shift, Kavana V-Room use and what your thoughts are? So anything you'd like to add to that?
No, just that we're kind of in that position to deliver that. We've got it now. I mean, it's really a case of we will kind of move as fast as the market is there to adopt it. I mean, one of the interesting things out of the lockdown was, we had 700 people buy cars online, sight unseen, in April last year, but very quickly people kind of reverted back to a more touch and feel type approach. And I guess that was somewhat of a surprise to us. We thought we'd see more kind of traction around just pure kind of online remote, online selling of used cars. And look, I still believe it will happen, and we're, I just see us being in the box seat when that shift does occur.
Great. The next one's from Drew. Holla Todd, is there any likely effect on the impact for cars now that the bubble with Aussies up and about to start? Holiday money competing with car purchase funds. Cheers.
At the margins, possibly. I mean, again, I sort of go back to that earlier comment. When people are typically buying used cars, they're doing it for a good reason. It's not a kind of whim or it's really because they've got a reason.
Great. The next one from Kirk. Will Turners consider branching out and selling other physical products on its online platform, or perhaps additional financial services offerings?
I think the sort of opportunities in the finance space are to be more of a B2C model. We typically sell the loans through dealers at the moment. We've got a small direct business, and that seems to be an obvious kind of place to grow in that finance space. And in terms of other products, nothing at top of mind at the moment. But as I said earlier, around that kind of vehicle life cycle kind of management, I think the maintenance service kind of piece is a sort of obvious gap for us to fill at some stage.
Great, thank you. Have you seen an increase in people buying or upgrading cars with money they would otherwise spend on overseas travel in the past 12 months? I think you did say that. Do you have a percentage or a number that you might be able to put on that for what you think it was?
No, I mean, it's very difficult to pinpoint that number.
Yeah.
I mean, again, I'd say the new car guys have probably been more of a beneficiary from that than we.
Do you have any initiatives to be resilient to market dynamics changing as climate change measures are introduced? And do you have any emissions reductions initiatives? It's from Terry.
Yeah, we do. I'd make a couple of comments there. One is about, we do sell a lot of damaged and end-of-life vehicles. So if you think for every car we import from Japan, we're probably selling taking 5 20-year-old cars off the road. So we sell a large number of those damaged end-of-life vehicles. So I think in terms of our kind of net effect, we're having quite a big impact in that space. We're doing quite a lot of work around greening our kind of building footprint and property footprint. So solar, water retention, those sort of initiatives. And then, probably the last one I'd point to would be the subscription business around EVs in particular. And we are absolutely focused on growing that EV fleet. We've had a great partnership with ECA to get us sort of up and running, and that's given us the conviction to do more in that space.
Great, thank you. That looks like the others I think we've largely covered actually throughout the podcast, and that is good timing. There was one there, another shares for us around cryptocurrencies. Our answer to that is thanks for the feedback. We're always looking at different options. We get ASX out the door, and we're all full focused on that at the moment, but afterwards we'll be looking at what's next, so we appreciate any customer input into that, that's for sure. Sonya, have you got any other questions you'd like to ask Todd? Or
no, I think we've covered really good ground today. Thanks heaps, everyone, for tuning in, and a special thanks to you, Todd, for being here, for answering all the questions, and for managing those technical difficulties. It was a really good chat, so thank you.
No problem. It's great to be here, Sonya, and great to know that there's a connection back into the Oxford, Farnell and Levin.
Yep, definitely. Cool. So that's it for us today. We'll be back next Thursday. Keep an eye out on the Share Club Facebook for what's happening next week. And a reminder that Australian shares are coming very soon. And you can register your interest for early access on our website. But have a great rest of the week, everyone. Thanks again, Todd. And thanks for everyone for tuning in.
Thanks, Todd.
See you later. Bye.